When most people think about crypto adoption, they imagine headlines, influencer hype, and dramatic price swings. They think the big moment will be loud, obvious, and impossible to miss. But in the world of real finance, the world where trillions of dollars move every day, change doesn't happen with fireworks. It happens with quiet agreements, signed deals, and the subtle but unmistakable approval of the institutions that run global commerce. And right now, that quiet approval just went to XDC and its trade finance platform, TradeFinex. While the retail crowd chases the next meme coin, XDC has been solving a problem so big and so overlooked that it barely registers on crypto Twitter: the inefficiency of global trade finance. This isn't about a niche use case. We're talking about the financial engine that powers $5 trillion worth of transactions every single year. The system that ensures cargo ships get paid for, supply chains keep moving, and international commerce doesn't grind to a halt. TradeFinex is now giving banks, exporters, importers, and investors a single blockchain-based platform to create, distribute, and settle trade finance assets, with XDC as the value layer underneath. And here's the turning point. Global banks aren't just watching this happen. They're starting to participate. Institutional doors are opening. Networks are linking up. And with every new connection, XDC's role in this machine becomes more cemented. This isn't speculation. This isn't maybe one day. This is infrastructure being adopted by the very players that keep world trade running. Stay locked in until the end, because once you see exactly how this green light from the banking sector positions XDC for the future, you'll realize this isn't just another crypto story. It's the beginning of a financial shift that most of the market won't notice until it's already complete. If you want the signal in a sea of noise, pay attention now. Like this so more people see it. Share it so the conversation spreads. And stay tuned, because the real story of XDC is only just beginning. The trillion-dollar problem that nobody talks about. Every year, trillions of dollars in goods move across borders: oil from the Middle East to Asia, microchips from Taiwan to the US, machinery from Germany to Africa. Behind every shipment, there's a web of financing agreements, credit guarantees, invoices, letters of credit, and settlement processes. This system is called trade finance, and it's the lifeblood of global commerce. Without it, international trade would collapse. But here's the catch. The system that powers this massive engine is stuck in the past. We're talking about paper-heavy processes, faxes still being used in some regions, multiple layers of middlemen, and settlement times that can stretch into weeks. The slow, expensive, and riddled with inefficiencies that cost businesses billions. For banks, this means tying up capital in long, clunky processes. For exporters and importers, it means higher costs, more risk, and a slower flow of goods. And for emerging markets, the very places that could benefit most from efficient trade finance, it means being cut off entirely from access to global liquidity. That's where TradeFinex, powered by the XDC Network, comes in. Instead of outdated, siloed systems, TradeFinex offers a single, blockchain-based platform where trade finance assets can be created, distributed, and settled seamlessly. A shipment of copper from Chile to China? Tokenize the invoice, split it into investable pieces, and let global investors participate in funding it. All settled using XDC's ultra-fast, low-cost blockchain. For the first time, exporters in Kenya, textile manufacturers in Bangladesh, or coffee growers in Colombia can access the same efficient, transparent financing channels as a corporate giant in London or New York. And here's why this matters for our angle. Global banks are not ignoring this. They see the inefficiencies, they see the cost savings, and they see the opportunity to unlock trillions in dormant trade potential. TradeFinex isn't knocking on their doors asking for a meeting. They're already in the room. They're building pilots. They're integrating systems. And those quiet integrations are where the future of cross-border commerce is being decided. This isn't crypto for speculation. This is crypto as a replacement for the rails that trillions of dollars already run on, and XDC is the settlement layer making it possible. From pilot projects to institutional endorsement. In traditional finance, especially at the institutional level, change doesn't happen with press releases or flashy product launches. It happens through measured steps, carefully tested integrations, and the slow but deliberate buildup of trust. And that's exactly the stage XDC and TradeFinex have just crossed. For years, blockchain projects in trade finance have been stuck in the pilot phase, proof of concepts designed to show potential, but rarely translating into real, ongoing use. Banks have dabbled in these trials, only to shelve them when they fail to meet regulatory standards, scale efficiently, or integrate seamlessly with legacy systems. TradeFinex has broken that cycle. Not only has it passed the rigorous technical and compliance scrutiny of major banks, but it's also begun live integrations with actual trade finance networks used by institutions daily. These aren't experimental sandboxes anymore. They're part of the operational workflow. The endorsements and collaborations we're seeing now aren't coming from niche fintech startups. They're coming from global banks, regulated trade platforms, and recognized industry bodies that are notoriously cautious about adopting new systems. These players don't just jump on the latest tech trend. They move when they see something that can reduce costs, eliminate bottlenecks, and give them a competitive edge. Why is this so important? Because trade finance has been plagued by inefficiencies for decades. Settlement delays can run into days, even weeks, choking cash flow and adding risk. Manual document verification creates mountains of paperwork, and outdated messaging standards slow everything down. Every inefficiency is a cost. And in a business where margins are often thin, that cost matters. XDC's blockchain layer, combined with TradeFinex's platform, attacks all of these pain points at once. Instant settlement instead of multi-day waits. Near-zero transaction costs versus expensive correspondent banking fees. Transparent, tamper-proof records that meet audit and compliance demands without human error. Interoperability with both legacy systems and emerging global standards like ISO 20022. This is why institutional tone has shifted. We're hearing less hesitation and more commitment. Industry insiders who once said, blockchain in trade finance is promising, are now saying XDC and TradeFinex are what we've been waiting for. And this isn't just about efficiency for banks. This is about unlocking the $2.5 trillion trade finance gap, the value of global trade transactions that go unfunded every year because of inefficiencies and outdated systems. By digitizing processes, automating compliance, and enabling cheaper cross-border financing, XDC and TradeFinex offer banks a direct path to capture that untapped market. That means more small and medium-sized businesses in emerging markets getting access to funding. More goods moving faster across borders. More capital flow in the global economy, all powered by blockchain infrastructure the average investor still hasn't heard about. When institutions start publicly associating themselves with a platform like TradeFinex, it's not for hype. It's because they see real money on the table and a system capable of moving it safely, efficiently, and profitably. And the banks making these moves now, they're not testing the waters anymore. They're laying the groundwork for full-scale adoption. And when that happens, the rest of the industry will follow. The trillion-dollar cross-border connection. Trade finance isn't some niche corner of the economy. It's the lifeblood of global commerce. The system that ensures goods can move from one country to another, that exporters get paid, and that importers receive the products they've ordered. Every year, this market moves over $5 trillion in value, spanning everything from raw materials like oil and steel to finished products like electronics and pharmaceuticals. And nearly every one of these transactions requires some form of financing, documentation, and settlement. Here's the problem. The current infrastructure moving this capital is decades old. Most cross-border settlements still rely on correspondent banking networks like SWIFT, which can take days to process a single payment. Documentation is often handled manually, increasing errors and delays. Regulatory checks add even more friction. Now imagine replacing that with a near-instant blockchain-powered settlement layer, one that's ISO 20022 compliant, can integrate with existing bank systems, and costs a fraction of traditional methods. That's where XDC comes in. Through TradeFinex, XDC isn't just a speculative token. It becomes the engine that powers trade settlement between banks, exporters, importers, and logistics providers, all on a trustless, transparent, and secure infrastructure. Here's why that matters. If even 5% of global trade finance volume moved through XDC-based systems, you'd be looking at hundreds of billions of dollars in annual transaction flow. Each transaction would require settlement liquidity, meaning sustained, high-volume usage of the XDC token. Because XDC's network fees are near zero, it makes the economics viable for institutions that would never tolerate high-cost blockchains like Ethereum for global-scale settlement. And the integrations already happening position XDC perfectly for this role. TradeFinex's framework is aligned with the Trade Finance Distribution Initiative, TFDI, a global effort that includes some of the largest banks and trade platforms in the world. This isn't a closed pilot or an isolated ecosystem. It's a network of networks with XDC as the liquidity backbone. This is also why institutions are finally paying attention. The gap between blockchain potential and blockchain production is closing, and XDC is right at the intersection where trillions in trade flows are about to go digital. Most people still see XDC as just another altcoin because they're looking at price charts instead of transaction corridors. But in the corridors that matter, between Singapore and Dubai, between London and Hong Kong, between New York and Mumbai, the infrastructure is being built now. And once these settlement pipes are in place, they can scale fast. The truth is, global trade doesn't adopt new technology slowly once it proves itself. When a system offers faster payments, fewer errors, and lower costs, it's only a matter of time before adoption snowballs. Because the competitive advantage for early adopters is massive. TradeFinex and XDC have positioned themselves as the plumbing of the next-generation trade finance system. And plumbing may not be glamorous, but it's indispensable. And once installed, it's incredibly hard to replace. In other words, we're watching the foundation being laid for XDC to quietly become the default settlement layer for global trade. And when that happens, the institutions getting in now will be the ones in control of those trillion-dollar flows. Institutional trust and regulatory alignment. In global finance, technology alone isn't enough to win. You can have the fastest network, the lowest fees, and the most scalable infrastructure, but without institutional trust and regulatory alignment, you'll never touch the flows that matter. This is where XDC's play with TradeFinex stands apart from almost every other blockchain project in the trade finance space. From day one, the architecture was designed to integrate with the compliance frameworks banks already use. We're talking full ISO 20022 readiness, Know Your Customer, KYC, and anti-money laundering AML capabilities baked into the process, and interoperability with existing trade platforms that banks have already spent millions to deploy. That's critical because the institutions that dominate trade finance, HSBC, Standard Chartered, Citi, DBS, and others, can't just flip a switch and start using unregulated blockchain networks. They need assurance that the settlement layer is secure, auditable, and compliant across multiple jurisdictions. And that's exactly why XDC is getting a green light in rooms where most crypto projects aren't even allowed through the door. TradeFinex's alignment with the Trade Finance Distribution Initiative, TFDI, backed by global players like Traditech and ICC TradeFlow, means the XDC network isn't just compatible with the trade finance industry. It's being woven directly into its digital transformation strategy. Think about that. This isn't an outsider trying to disrupt from the edges. It's an insider network upgrade, an enhancement to a centuries-old system, backed by the very entities that run it. And when a bank adopts XDC-powered settlement through TradeFinex, it doesn't require them to rip out their existing processes. Instead, it slots in alongside their current systems, speeding up settlement, reducing counterparty risk, and lowering operational costs without forcing a painful overhaul. That is a massive competitive advantage for adoption. It's also why the barriers to entry are sky-high for any competitor. Once a bank's settlement flows are running through XDC rails, switching would mean retraining staff, rewriting compliance processes, and renegotiating integration with trade platforms, a logistical and regulatory nightmare. In short, once they're in, they're in. What makes this even more significant is the timing. The World Trade Organization and other global policy bodies are actively pushing for the digitization of trade documents and settlement systems. This means the industry is not just open to change, it's under pressure to adopt it. And when global policy shifts align with tested, compliant technology that's already integrated with the major players, that's when adoption accelerates from pilot programs to industry standard. XDC, through TradeFinex, is now positioned as a trusted, regulation-friendly liquidity layer at the exact moment the trade finance industry is being forced to modernize. That's not luck. That's strategy. And for the institutions making the call, it's a strategy that could lock XDC into the plumbing of cross-border commerce for decades, quietly taking a cut of every transaction that moves through its rails. The window before the headlines. The public market is still asleep on this. Retail traders are busy chasing whatever's trending on Twitter, while the real story, the one with direct ties to the infrastructure of global trade, is unfolding quietly behind closed doors. XDC and TradeFinex aren't pitching maybe someday concepts. They've already secured institutional nods, already integrated with the platforms that banks and trade networks rely on, and already aligned with the regulatory frameworks that make billion-dollar flows possible. When the next trade finance digitization headline breaks, it won't be about a new blockchain project entering the space. It will be about how the transformation is already underway, and how the pipes were laid by XDC long before anyone noticed. That's why this moment matters. It's the window before the headlines. The time when the moves are being made quietly, the integrations are happening off-camera, and the early positioning determines who controls the rails for the next decade of cross-border commerce. If you understand the scale of what's at stake here, trillions in annual transactions, running on a network built for speed, security, and compliance, you also understand why the smartest move isn't to wait for mainstream validation. By the time it comes, the biggest gains will already be gone. So if you found this breakdown valuable, share it with someone who still thinks blockchain is just about coins and price charts. Like, comment, and subscribe so you don't miss the next deep dive into the deals, partnerships, and infrastructure plays shaping the financial systems of the future. Because by the time the crowd catches on, it'll already be too late to catch up. Ask ChatGPT.